What's going on, everybody? If you're in the chat, start posting some money faces, because it's getting to that time of the year.
Yep, we're getting closer, man.
Yep. So welcome in. I got my co-host here, Ryan. We're going to be talking to you guys about the markets this morning. We'll be basically covering some currency data first and some jobs reports and things like this of this nature. To try to give you guys a good view of what's going on in the macro and what's going to lead into what will be here in the short term a bottom for equities, and then a quick bounce maybe in crypto. So we got a lot of cool charts. I'm actually going to be pulling charts out of the private Discord room to show you guys kind of what work gets done over there as well, and how we've been tracking the markets and making calls. And then, if you have any questions along the way, feel free to ask, and we'll pull them up on screen and try to answer them swiftly. So without further ado, Ryan, what's your look on the markets as of right now? And I'll pull up the dollar chart here to just give us something to look at.
Boy. We're in such an interesting spot where the market is like acting almost like just more and more forward looking as the year progresses, right? It kind of seems like every single time people think that it's got to go down further, it just keeps wanting to price in all these things, right? Price in higher interest rate hikes, price in the fact that it's going to be for a longer period of time in 2023. And it's kind of like interesting to see that shift, because you posted up an interesting chart recently about how when the Fed pivoted in the past, the markets would tank. Well, the markets were less forward looking back then, right? The information dissemination wasn't as effective back then. Right now, it's just everybody is so hyper aware with Twitter and the Fed, and just the awareness that has been really just been shifting to the normal everyday person, and even retail investors that are now, ebbing and flowing with bigger investors. And really what I'm getting at here is I don't know if that pattern is going to exactly play out this time the way people think, where they're just holding for the markets to drop really big when the Fed initially finally pivots big time, like a big, like 400, 500 basis point drop. And that could still play out. But the point is like you keep seeing the market and everybody talking about the market pricing in these higher interest rate hikes. And now they're thinking that a 50 basis point is coming in December. And whether it does or it doesn't, I don't think is a big deal. I think what's the bigger deal is understanding that we're so close now because crypto finds its bottom before stocks do. And if stocks are already talking about finding bottoms going into 2023, we know crypto is typically a quarter or so before it, usually. So what does that mean? I mean, if stocks find a bottom around end of Q1 or end of Q2, we're talking cryptos, January, February, March. I mean, we're in December right now, guys. We're not too far off. And we'll get into HEX stuff later. But as it pertains to the markets as a whole in 2023, I mean, we're looking at elevated interest rates. We're looking at job reports that are still staying strong. And regardless of whether or not you agree with that, as it pertains to how the Fed looks at job report data, they're looking to keep these interest rates high all of 2023, or at least a good portion of it, until something structurally breaks. So there's two things we're looking out for. Something big to structurally break in the system, right? Whether it be a sovereign debt crisis, some of the things me and you have talked about before with the currency issues going on with the DXY. Something big would have to happen. A black swan, whatever you want to call it. Something big would have to happen that would make it apparent that the Fed needs to immediately pivot. Fed Chairman Powell said recently that he would rather raise interest rates too high and break something, because they now have, quote unquote, tools to help fix the problem. I think we talked about that too on our last stream. So we know that they would rather over tighten and then blast with their tools to fix the problem. So that's one thing to look out for. And then if there is still a very small sliver of hope that they're going to have some sort of soft landing, then we find a bottom sometime in 2023 on the higher interest rates, because the markets are going to price in pretty soon here the fact that interest rates are going to hang out at 5% the rest of the year. So that's kind of where my head's at. How that impacts crypto, honestly, I don't think it impacts it too much. I think a lot of the value coins that are already down 95% are a great buy right now. They're not going down 100% if you're really convicted about it, like HEX. Of course, that's just opinion, not a fact. But the point is you do your due diligence on these things and figure out what you think is going to hold value. And 95% is basically what it's always been. Things like Ethereum, Bitcoin, those are some of the largest retracements they ever did. And those are the best buying opportunities. So it's tough to say, as it always is. Everybody that comes on and you ask this question to is going to say the same thing. I don't know for sure, but this is what you would look out for. You got to be ready to pivot. Like, that's the whole point. You're prepared so you can pivot. If there is a black swan, you're prepared so you can pivot. If there isn't a black swan, you're already prepared, So that's kind of what I'm expecting. For people that aren't prepared and don't have cash in the bank and aren't ready with lower bills, it's going to be a rough year. Costs are going to probably continue to go up. Inflation is going to continue to remain elevated. people are going to continue to get laid off. The people that aren't paying attention to the system are going to get wrecked next year, for sure.
Yeah, well, I mean, so like all that money that got printed over the last couple of years, that ended up in somebody's pocket, right? So that money is now sidelined and waiting for some event to occur, and a lot of those events have been like the failures of centralized parties in crypto, and then that money's now sitting waiting for that stuff to flush out. And so what you're seeing in the dollar here is like a weakness and a breakdown, and we'll get further into that in a moment. But to continue with my point, the Bitcoin chart is showing that it's just dropping less and less. And so what I mean by that is when we look at let's see which chart I want to bring up. This one here. So like the downside is minimal compared to where we came from with the high. And so the thing to keep in mind with assets like Ethereum, Bitcoin, HEX, their inflation rates and their monetary policy is permanent and locked in, and it's predictable in the same way that the Fed has now become predictable in their rate hikes and rate changes. And when something becomes predictable, smart managers of money, smart money, can then make calculated decisions based on a rate of growth. So really, it's kind of like a delta between two variables. But now once you have a trend in policy, then you can more easily find a comfortable place to make a new position, if this makes sense. So in other words, we know that in the case of Bitcoin, there's only ever going to be 21 million Bitcoins. It's minted. I forget what the rate is right now. I think it's like 3.25 per every 10 minutes. So that's predictable over an arc. And so then you can factor in like the sell pressure and stuff over time and how far it's come down. And ultimately what you can do is you can more easily predict an outcome now. And so now we're getting toward the end where the dollar's already showed its hand. It's fallen sharply. And who's going to be willing to hold on to that when asset prices start to rise? Because you know that you're not going to get a 10% gain or a 20% gain in the dollar against assets, but you may get a 10, 50, 100x gain in some other asset if you don't take advantage of the discounted price. You're basically buying other people's bloodshed. And it's all predictable because these things are permanent, immutable, and they're going to be here, and their inflation is predictable. And because of those factors that, here we are, we can start to find a bottom. And so like, even though the FTX blowout on Bitcoin, like it only caused a 23% decline, 27% on the wick, but you're only down 20% since then. And in crypto terms, that's just like, nothing.
That's nothing.
It's, crypto people hedge for that very reason. And so, there's not that much left to fail from like a centralized angle. So it's like, what kind of catastrophic events is going to bring down the price when there's already this vibrant mining economy underlying the entire crypto ecosystem in Bitcoin mining, and in like the HEX inflation model. So like these are permanent. They're the weak users are being flushed out, have been flushed out, and what's left now is just the strong will survive and the strong will prevail.
Yeah, I agree, man. I mean, this is why DCAing is so important, and also why, like, once again, having cash prepared and ready to go on cycles shifting is also important, because you can't buy when you don't have money, period, no matter how good the opportunity is. If you're in a bad mindset because your health's not in a good spot, or things are not set up in your life to be in a good spot, you're not in the proper mindset to want to invest, even if you do have the money. You know what I mean? So that's why it's so important to not only like be price conscious when it comes to price levels of these assets, but also having everything else in your life in a good spot to be able to be put yourself in an advantageous situation to make the actual decision to buy. Because Bitcoin's hit low levels all the time. Who is actually of the mindset to buy back then?
Yeah, well, and another thing too here that's important is like a lot of people that are hearing this message hopefully did take advantage of the high prices of the past and were able to pull out liquidity at the top, or 50, 100% higher than where we are now on asset prices. So you did have fuel to put back in now. But if you didn't, hopefully you kept your job and are continuing to earn a steady income so that you can dollar cost average into these things now that they're getting down to the bottoms of their lows. So what I have in front of you here is like a Bitcoin US dollar chart with the logarithmic growth curve that I was able to project out. This is all manually done by me. And when you put the fractal of the bottoming pattern from 18 and the bottoming pattern from 2015 on Bitcoin here, and you put it out over time, our bull run is coming, and it's just a matter of, how fast, right? Because the bottoming period is long. It's like 1 to 2 years, and it's volatile. And there's a lot of opportunity to make money in here as long as you don't sell yourself short.
Yeah.
So as you can see, these bands it doesn't look like a lot's going on inside of these lower bands of this price action here, but it's a $20,000 window here. This
What's
goes all the way
the
up to
bottom
like
target there on those?
bottom target would be roughly around that 12,000 level.
Got
It's between 11. So we can go into that in detail now. I'm going to close this. That's one of my charts from the private Discord. So here's your targets, basically looking at Bitcoin just from like if there were FUD or anomaly type events like March of 2020 again, where that would take you. Each level gets harder and harder to break. So the yellow line is on Bitcoin and the reason why we look at Bitcoin first is because it's the driver for the market overall. So that's why we look at it first, because whatever Bitcoin does will have an effect on most of the other cryptocurrencies. And if it doesn't, we will talk about that later in the stream in the case of HEX. Or it has less of an effect in the case of HEX. So in this case, this yellow line is the summer of 2019 top here at 14K. It was like 13.9 roughly, 14K. And so that would be like your first level down from here. And then after that, you had like the DeFi summer 12.5K top, and then the low at 10.5. So if you were to break the yellow and the white dotted, it would be a wick down to that 10K level and back, I believe, just because it would be similar to what played out in the COVID crash. But that wouldn't be something you'd see now. You'd see it like next summer. It'd be 6 to 12 months out is when you get that anomaly event after some sort of a rally to try to recover part of this channel. Just because we've already seen so much damage done to price, there's a lot of opportunity for big money to come in here and try to there's like plenty of opportunity here for traders to make money just inside of these channels here. So like there's no reason why without any kind of blowout for it to crash lower immediately. So Bitcoin looks good to me. I'm not necessarily a buyer here, but it is an opportunity zone, and every new low is something that is like increasingly better of a buy. So that's kind of where I'm at with Bitcoin. And the reason, and so if you were to just talk about how the dollar is related to Bitcoin in such a way, like when the dollar starts to come down in price, historically, Bitcoin comes up in price. That's just how this works, because it's just all asset prices boom when the dollar loses value.
Yeah, money's got to go somewhere, and there's only so many places for it to go.
Yeah. And so the way that we were looking at this dollar chart, because that's like basically your leading indicator right now, as well as like the bonds and gold. Basically, it's like the consumer sentiment of, well, what kind of outlook do we have in the short term as far as like, is the dollar just going to break down completely, or is it going to, you know what I mean? Like, is it going to go to zero tomorrow? Probably not. And if you look at this on like on a monthly time frame, the dollar's been in an uptrend since 08, since the economic crisis of 08. And like this is what the way I kind of envision this happening. There's a few ways that we can talk about it. I'm going to go through my private charts right now and try to pull up 3 different scenarios for the dollar, and then talk briefly about what that would mean for crypto, because I think that's why a lot of us are here anyway, is to want to know what kind of impact that's going to have on our ecosystem.
Mm-hmm.
So I'm scrolling here. I'm trying to find the chart. And the major thoughts are like 3 basic thoughts, which is dollar destruction would mean just like straight down. So you'd get something like this, where there'd be the dollar sharply dropped. It tries to find support on this middle upper band, and then it breaks down, and you get a huge rally in equities. The Dow Jones continues to rip. Crypto finds a bottom and rips up, like in 2019 when we had our move from 3K to 14K Bitcoin. That type of scenario would cause this intermediate kind of swing motion, and then into 2020, end of 23, 24, the dollar regains some dominance. Crypto goes back into a deep slump. Equities fall sharply, and then as the dollar tries to recover this lower mid band, that's when you get the final drop hard on the dollar, and people just can't quite get. There's just not enough interest in dollar, and maybe there's like a lack of faith from, maybe you see this reflected in the bond prices, and there's a lack of faith from like other governments like Russia, China, and they stop having US sovereign debt and they go into like gold, for example. And so then that would be like one indicator you'd look to see how this is going to play out into next year and into 2024. And if that were to occur, you'd see another rip in equities and crypto upwards as the dollar just gets crushed back down to these levels around that 94 level, which has been a significant key level, 93, 94 for the dollar for some time going back. So this is like the dollar destruction scenario.
See. I know what's interesting about that timeline. You mentioned a couple of good things, and you have the dollar or the de-dollarization that's going on, right, with BRICS, with the East versus the West right now in terms of sovereign debt and how that debt's held, right, whether it be dollar-denominated bonds, which is typically the case, but we're starting to see all these countries move away from that, whether it be in petrol, whether it be in just reserve currency status, right, with gold, et cetera. And that's a big shift that's already underway. It's been happening behind the scenes. Agreements are being made. And that in and of itself is going to work its way just more aggressively, right? It's like all of a sudden, it's like slowly, and then it's all at once, right? And on top of that, you have the Fed Now service coming out, right? People are aware of central bank digital currencies. And I don't think the introduction of a CBDC is going to make the most massive change on the planet for Americans, because they're going to introduce it very, very slowly. But what it is going to do is shatter confidence in what's to come, because of their ability to really inject liquidity in a very, very unique and different way, right? Remember how inflation was once formed was by not only just M2 coming up, but really how it was injected into the system, right? Because it was done very differently this time around with stimulus money.
I guess I should probably pull that up so you guys can see exactly what he's talking about. This is literally the amount of dollars that came in 2020. I mean, it was like a rate of growth of 183% more dollars came in from the 08 financial crash into 2020, 180% increase in dollars over 4,200 days. Then 2020 happens, and in 140 days, we increased the supply by 300% from that level. And it's just insane.
It was a very different way in how they got distributed, right? They went directly to the people too. So that went directly to asset prices, that went directly to cost of goods, right? So inflation really, really got hit hard in a unique way, plus the supply shock, right, going on with the supply chain. All that came together for this perfect storm. And the point is when the CBDC comes out, you're going to have basically a situation where, the Fed could go, hey, Axis, you have to download the Fed wallet. Here's your Fed coin, but you can only use this for food and gas. What do you think it's going to do to those prices, right? When they know that they have people that have now 10,000 Fed coin to spend on only those goods. You can't go out and buy a car with it. You can't go out and buy crypto with it. You can't go out and buy candy with it, or food. Yeah, I guess you could do candy, right? But the point is limiting what you're purchasing. Giving purchasing power, but limiting it, and also the direct liquidity injection, because typically they could do it as it pertains to bond purchases, right, and adding stuff to their balance sheet. But that doesn't work into the system, inflationary speaking, the same way it would giving everybody a stimulus check, right? Those are two very different measures on how the money is being distributed into the system and how quickly that can ramp up problems. So that's I do see the dollar. Yeah, like that's the big deal. It's not M2 coming up, but how it was injected into the system really is how it propagates, right? Yeah. The methodology changes.
So, well, for a fact that when those stimmy checks were received, or let's say the eased government loans, like I think it was like if you're a business, you could get like 40 grand for free. Just as an example off the top of my head. Mm-hmm. That money never necessarily has to be paid back, right?
I honestly don't know the details. I don't want to speak on it.
Either way, the point was that money got injected into the economy, but then immediately got siphoned back out to cover people's expenses anyways. So really, it ended up back where it started, in my opinion.
Which was there's a lot of fraudulent claims that they still are never going to be able to catch all of them, and all that money just went into buying shit, which is further pushed up.
Which is what pushed up prices, yes.
Yeah.
Which is why they raised rates to try to bring all the asset prices back down to more stable levels that are actually based on real valuations and not just some foo-foo excess inflation money. So we got a couple questions here. Just a quick comment on Pulsechain, because we will talk about Pulsechain after covering the RH ecosystem in a bit. One of the reasons for the Pulsechain delay is perhaps due to the value of the sacrifice that was made in non-stable coins. They're all down tremendously. Now, unfortunately, that's not actually true, because those coins were actually sold into a stable coin when they were received.
So it was whatever the value was at.
That was the value over a year ago and the highs. So that money actually got pulled out. So the question is, as the crypto market sold off, where did the money go? Well, it went to
stables in one wallet.
You know, it went into
wallets.
stables, and so we can reinforce that point by showing you the Stablecoin Index chart, which I can pull up here.
You can also see the wallet that has the Pulsechain sacrifice address on it, and just all the stables that are sitting in there.
Yeah, yeah, you want to pull that up?
I don't have that on there right now.
Okay, it's under. You go into the HEX. I'll get it. So before I go any further, let's just talk. We'll get into that in a second. This is the stablecoin market cap dominance, which means that the amount of stablecoins in the crypto economy is near all-time highs. They've never left. There wasn't stablecoins deleted. There's just more and more of them sitting on the sidelines, meaning there is just money waiting in stablecoins to be re-injected back into Bitcoin, ETH, HEX, these things, Pulsechain. And when that happens, this chart will sharply drop down because the total crypto stable coins will drop relative to the asset prices of the real cryptos. So here, this is an index of USDC, USDT, and DAI combined over competing against all of crypto. And look at it's dominating in this bear market, and it's just near the high on the top of this bull flag, but it can't quite break out, which is signifying weakness in stablecoin dominance, and that eventually this is going to spill over back down.
Yep, it's less of a reason to sell in the stables these days.
So let me pull up Etherscan so you guys can see where the
isn't it linked on the Pulsechain website too, or no?
It might be, but I just know where it is. So if you click on HEX and you go to holders, the PulseX sacrifice is here, for example. See if we get here. All right, so it's sitting on $278 million of DAI, $700,000 of Gemini dollar, $2,000 a Euro Tether, and then HEX, which has never been sold, which is bullish for HEX. Look, it's never been sold for stables. So that's just the PulseX. Now, I'm sure that whoever's in control of those funds did the same exact thing with the Pulsechain sacrifice wallet. So there's your proof. Let's see what.
That's why there was a run up. Just like if you want to look back at the price chart, that's why there was a run up, because people wanted to get the most value on their sacrifice by selling it at that point. People didn't know if it was going to be all-time highs or not, but remember, people were very happy when they sold or they sacrificed at like 30-cent HEX, because HEX obviously went in a downtrend after that. So that's why people were really happy about that. Because if you had waited, you would have gotten a lot less value on the dollar.
This is the HEX chart. This is when the PulseX sacrifice went live, was around this bottoming period on HEX at around 10 to 12 cents. I think it was actually 12 to 14 cents in here roughly. Yep. And then it ran up to 35 cents. And so if you were sacrificing along this route, you were getting more and more PulseX for your sacrificed HEX. Maybe not the case for the other cryptos because they were falling at that same time. This is when we started to see a decorrelation in HEX versus the rest of cryptocurrency. And we'll show that.
The only way people would be screwed is if, well, the sacrifice isn't open anymore, but if the price ran up higher than that on anticipation of the release.
Which it tried to recover. So,
yeah.
I mean, just to get into specifics here, so you guys know, at this stage of the game, around January of this year in February, before this breakdown happened, it was the end of the PulseX sacrifice phase, and there was a huge $20 million bid wall put on the HEX liquidity to try to prevent price from crashing. And then that failed, and then there was this was a 30% candle day, and then we started to build structure leading up to what was going to be the May release of Pulsechain, and because it did not come, some large players, this was literally a huge cut in value. You can consider it kind of like a stock split in the sense that because that never came, large players exited the system, and the price just went down to here and just continued what it was already doing. So if you imagine that never happened and Pulsechain did launch, and you draw out a fractal of like what price may have done, you'd still be in similar territory, basically something like this, where we would have been at 10 cents. We would have never broke the 10-cent level. So this is actually a hugely discounted zone where, you know, we should have maybe just rounded out and held these levels and kind of tried to hold the 10-cent level. But because of the lack of Pulsechain, like we got that massive exit of liquidity from the system. And so this has just been a huge generational opportunity. And nothing says that more than the market cap dominance chart for HEX, which has right now just been stable at these same levels in this range for since the big crash, since it's been for almost 200 days. So there's about 90 days left before HEX has to make a decision on whether it's going to hold the midline of this falling wedge, or if it's going to break up or break down. And look, right now it's moving up. It's going to go and test the upper line, in my opinion. So it's exciting to see these things, because nothing quite looks like this. Nothing quite is trying to compete with all the rest of crypto in the same way that HEX in the staker class is. Let's see what other questions we got here. I will post that dollar chart. So we've been shifting around topics quite a bit. So that dollar destruction chart, just for anybody that just joined, this is the dollar destruction chart, which basically you can go back and like listen to my like how I explain how this would play out over the next few years going into 2026 on equities and crypto. This would imply the dollar would fall relative to asset prices. The other more likely scenario would be something like this, where the dollar kind of like tries to regain dominance, and the Bitcoin and the crypto bear market and the equity bear market continues and struggles for a few years as the Fed keeps its boot on the neck of the public and just continues to try to make the U.S. Federal Reserve System a dominant player in the global economy for longer. But that would end of 2024 in a sharp decrease that would just completely decimate dollar confidence and would be a huge rally in all asset prices. So it'd be unwise for them to do that. And it would also just wouldn't, I mean, this is a possibility. So maybe you don't get a quadruple top, maybe you only get like a triple top, like we did back here in 2000 on the .com bubble. But I'm not of the belief that the crypto run-ups and the stock market run-ups went to levels where they require this type of an outcome.
What's the, I think it would be helpful on that US dollar destruction chart to just quickly like cover, those are monthly candles, right? Like what's that time frame like, just roughly?
These are weekly, but these are weekly candles, super zoomed out. So yeah, this is like this is the overall chart from 1976 on the left all the way through till now. And so I think they're weekly candles. So I know it's like there's a lot of data packed in here, and so if you want to come in here and look further into these things, I may post some of these on Twitter, so you can get a better look for yourself and try to theorize on what kind of outcome you think might happen and how you want to position yourself best for the next cycle.
Yeah.
What else do we got? We got I did have one other chart, but it's pretty ludicrous, so I'm not gonna show that one at this time. For as far as the dollar predictions,
ludicrous, he says.
Ludicrous. I guess we could talk about just like the overall HEX liquidity. Oh, there is again probably more questions. We could look at HEX liquidity in a second. Okay, here's a question. How do you think CBDCs will influence the next bull run? It's bullish. It's bullish. We already use digital currency. It's already monitored by the IRS. It's already monitored by all of the large 3-letter agencies. The entire system's already a CBDC without a blockchain backing it. That's been my belief for some time.
Yeah, that's a good way of wording it, for sure.
So ultimately, it has no effect. Like the people, our generation of people, investors, are looking toward crypto, free cryptos, free markets. That's why you have the huge volatility and swings and the new opportunity. That's not going to change. Like that's already ingrained in people. Bitcoin already won the game of validity, right? When you look at the Bitcoin chart on a long-term time frame, I mean, look at the thing. It's showing the truth in the way, right? Look at this thing. It's gone up, 6 million%, like crazy. Just there's so much opportunity in crypto that you just can't. Nothing that you can say about CBDCs is going to change that unless it gets to the point where you cannot swap a CBDC 1-for-1 with a crypto. Like if there comes a point where it's like it were to be outlawed, which it's impossible it's like 99.9999999% impossible that somebody's going to say, because then you're starting to infringe on free speech and free will and like whose money is what. And
as well as like a bunch of other countries could say, no, we're not going to do that, right? So you'd have to have
Right.
literally a global standard set, which
Correct.
fat chance of that happening when if staying in Bitcoin and cryptos gives China the edge and Russia the edge, you think they're going to side with the US and say, nah, you know what, let's just turn this all off because we want to have CBDCs run shit? Like, no. And to your point, even if CBDCs can't be swapped, honestly, I don't think they will be able to be swapped. I think they're really going to be limited, just like food stamps are now, man. But what that does really do is it really shifts the momentum. It picks up momentum on the dollar losing credibility. Because remember the inflation that's going to come from a direct injection of liquidity of however much you want through an app, right? That's going to pull up certain inflation in certain sectors, whether it be consumer goods, hard goods, food, etc. So what I think that's really going to do is it's going to further the discussion on the dollar destruction theory that you have going on here at a much faster pace, right? Because when they have to pivot and use these new tools, because they're going to break something. Paul said he'd rather break something and then fix it fast. Well, that means the CBDC, that means FedCoin, that means injecting these things in people's wallets to immediately spend. And that means higher inflation. It's like, guys, get used to inflation being higher. They're not going to hit their 2% target. If they do, it won't be for very long because it's going to come back. And that means the dollar losing more value. And it's really just going to shift people's mindsets into really thinking, okay, the dollar is the last place I want to be, which does mean more capital, more inflows into sectors like crypto that are a safer bet, into things like commodities and precious metals that are obviously going to be a better store of value.
We're definitely going to have to talk about precious metals, and then we'll get into Freddie's comment here, his question.
Yeah, that's a good one.
So here's the gold chart, and it made a triple bottom. I'm looking at a 3-day chart here. It made a clean triple bottom and has just made the biggest move in recent time. In 26 days, it's up 10%, which is huge for a multi-trillion-dollar asset class like gold. Yeah. And part of this is because governments outside of the U.S., such as Russia, China, and others, are abandoning U.S. sovereign debt and are now trying to back their new currencies with gold, and they're trying to back it with real sound money standards. And so, to me, this is signaling this is the defensive play against a Fed that wants to try to control the world. And the Fed is only a subordinate of the elite class of rulers, right? So ultimately, that global standard just looks less and less likely. It's showing that the defense is in gold, which is real sound money. Copper is also going up, and that's, copper is a good indicator to look at as far as showing economic growth, because copper is used so much in growth of economies. And then with that, like, you got the Dow Jones screaming higher off the top of this descending thing, so it's already it's almost out of its like real big testing zones, and we're going to come into those. It's got legs to move. And so, like, all these things are trying to point toward the direction of the markets agree and they like a lot of what's going on. They're seeing upside. S&P testing its top of its downtrend resistance right now. So we're in the end of the year, into the new year. Those first few weeks is going to tell you the trend for the year. I think it's going to be volatile. So anyways, back to Freddie's question about what Pulsechain launch will do to the market cap, or will do to the entire crypto market. So what I do for these types of questions is I go back and I look at market dominance of the assets that have performed the best. So in the case of Bitcoin was the 99% of all crypto in the beginning, back in 2014, 2015. And then with the advent of Ethereum, it really threw a wrench in Bitcoin's strategy, and it did more. It had more utility. It had faster transactions. And as you can see here, Bitcoin dominance just fell off a cliff, and I could just drag this down forever. Look how far it went from 99% of all crypto, and now to modern day, it just has been crashing for years against all the rest of crypto. And so it lost dominance. So when you ask
have a time frame for Matic, I'm just curious, just because like for some of like the ghost chains that just like aren't as popularized, of course, as Ethereum. I'm curious if that was like the same effect, but just much smaller than Ethereum.
Well, we're going to get into the Ethereum dominance chart next, so that'll be the interesting one. So what impact will Pulsechain have? Look what Ethereum did to Bitcoin. It just completely ruined Bitcoin's parade from a market dominance perspective, and now it's near all-time lows. It only accounts for 40% of all crypto. I'm not saying that it's a bad asset, just saying that it was overvalued relative to the possibilities and potentials of an infinite future of new money standards and new technologies. So when you pull up let's pull up the Ethereum market cap dominance. Here you can see that Ethereum has done nothing but gain on crypto for its entire lifetime now. It's still down 36% from its all-time high of market dominance of 30% of all the crypto market, and that was in the heat of the summer of 2017 during the heat of the Bitcoin bull market 17. And then it fell during the 18 and 19 and then bottomed and it never looked back. And now it's gained over everything for years and years and years. So it's up 187% in 1,120 days. And this is kind of the same effect I expect to see on when you compare Pulsechain Dominance to, if Pulsechain delivers on all of its promises, it will have the same effect on Ethereum. So then you'll start to see Ethereum, struggle like this, into the future because Pulsechain will just innovate in so many ways. That's like all the promises that are made. And nothing says that more than Richard Hart's tweets right here. He's like, one day testnet v3 will be out, then pulsechain.com and PulseX mainnet, then glory. I remember what out was like waiting for HEX to launch. Then all our dreams came true. He's telling you, and he's saying HEX is 3 years of perfection old. He's out here saying, he's giving you the cheat code on his Twitter feed, telling you what's about to happen. And I'm trying to show you what Ethereum did to Bitcoin with its innovation, which was this massive decrease in market dominance. And then when you try to run that over, because look, when you look at Bitcoin in the beginning, it's got that same sort of V pattern, and it looked like it started to roll over here, and then it started breaking key levels, and then eventually it just couldn't recover. And then the same thing is happening to ETH now, where it's starting to roll over relative to all of the market. And so I anticipate with new technologies, not just Pulsechain, but other great new technologies that are going to come out over the coming years, they're going to make ETH lose dominance. That's not to say that ETH won't go to $8,000, $12,000, or $20,000 per token, but just that rate of growth is not going to be able to outpace something that starts at zero, that has product market fit and brings all the promises and innovations that we're looking for in a layer 1 blockchain.
That makes sense.
What is the curve chart you use? Just ask another. I don't know which chart you're talking. Oh, you're talking about the Bitcoin. This is all manually. I'd manually drew these curves based on the lows, and then I copy them out and get the right angles to try to project growth. This is one way of projecting logarithmic growth. It's not like a mathematical equation. It's just based on the eye. So it's like one of the skills that can be developed by learning technical analysis. And just even by knowing a general regions to buy and general regions to sell, that's obviously a huge winning strategy. Like, it's just you could even not know this stuff and just look for things that are good, that are going to be here for a long time, that are down 80 to 90%. Let's see, what else did I want to share with you guys? Oh, we were going to look into the HEX liquidity. So this
HEX I haven't popped in there in a while. Ooh.
So this shifts all the time, but for those of you that don't know how to read the liquidity chart, the red line is where the price is now on HEX versus the USDC. If you go to the right of the line, it means HEX price is going down. And if you go to the left of the red line, it means HEX price is going up. And why that's important is because each one of these bars represents a certain amount of coins that are tradable. So you can see that these blue bars are a lot taller than these blue bars here where we're sitting now. That just means that there's more dollars to trade there. There's more HEX to trade there. So if you start to push into these bands and there's lots of sell pressure comes in, the price will move down less, moving left to right up here than it will here to here. And that's because this is saying that at 3.6 cents, there's about 1.8 million HEX. At 3.5 cents, there's about 2 million HEX. At 3.53 cents, there's about 2 million HEX, 3 million HEX, 2.3 million. So it would take, if each one of these bars is 2 million HEX roughly, and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like 20 of them, 20 times 2, that's like 40 million HEX. that somebody would have to market dump 40 million HEX if the price was at here at the end of the range at 3.6 cents. They'd have to market dump 40 million HEX just to get the price back down to 3.24 cents. So this acts, if you can get through these walls, that acts as support. If you can't get to the wall because people keep selling it down back here, it's actually easier to sell the price down here than it is here, and it's super easy to slip the price out here. And when you're down like below 2.1 cents or you're above 5.4 cents, that's where the price can really start to wick in either direction. So that's why I have this chart. Each one of these colored boxes represents the blue bars on this chart. But it's, instead of visualizing like this, I'm visualizing it like this against the price. So you can see that the price is just rejected off this little yellow box. That little yellow box is right here, this little chunk right here between 3.13 cents and 3.22. And then at 3.24 cents per hex, you get into the thicker liquidity band. If you see HEX get up into the orange band, that's that thicker liquidity, and it gets to the top of that band and tests that 3.6, 3.7 cent range and then gets sold down 40 million, it'll only bring you back to 3.245 cents. So the chart's building structure into these liquidity zones, but they have shifted around a lot, but near the bottom is when there's the most volatility, which is why you get these huge wicks. So this liquidity has been shifting and changing a ton over the last few months. It's just been always changing day by day with each new break of a low. So on this chart here, where there's like no liquidity out here, there's only like $2,000 per bar. That's what created these wicks to the downside. Like in 15 minutes, the price goes down 15% and then right back up in 15 minutes because there's only like $2,000 per bar. So somebody can come in with a $30,000 order and just push the price right back up. So it actually works in both ways to support and prevent price from moving. So what HEX effectively is sitting in is just like it's like basically just kind of sat at a low, and it's not really moving in any which direction, and it's just a crab market because the amount of buyers are there and the amount of sellers are losing strength. And that's why this chart here is so important, which is like a longer term falling wedge since the top. These falling wedges are bullish patterns, and you can see that if I delete the wedge out of here, it's just a falling descending parallel channel. And where we just tested the midline of the channel and we saw like a short-term resistance there, but that's not got as much strength now as it did back here, Obviously, when we held it for quite a long time post PulseX SAC phase, and we tested the top a couple times, and the market wasn't bullish enough at that time with a lack of a pulse chain launch, and so we had some actors just sell out of their positions, and now we're trying to rebuild our base down here before we just shoot right back up, above 10 cents sometime in the future. So if I go back and put my falling wedge back on, you have basically 125 days for HEX to basically squeeze down into this channel or maybe break above into this little band here and just chop, 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 and then break out. And so this top time frame here, these two time frames, this is 242-day cycles. So basically from the top to the major breakdown was 242 days. So I started another one from the breakdown to the end of this would be 242 days here. So I expect a move to happen within the next, I think it was like 90 days till that time on HEX. And so there's less volatility now. You got bullish divergence on the RSI. It's getting stronger. These huge spikes on the RSI are bullish. That doesn't happen in an asset that doesn't go up. It happens in an asset that's really bullish, but just has an insurmountable amount of sell pressure, bringing the RSI back down here. But the RSI even with all that sell pressure, it wasn't able to break the bullish divergence of the trend that's happened. It's a positive slope on that, so that's bullish. A falling wedge is a pattern that is bullish. It's to be traded, and then you look for the breakout point, and you can do a measured move. And so even if you get to the very end of this wedge, which is unlikely, you're looking for 164% from a 1.8 cent HEX. So the downside is minimal, the upside is infinite on HEX. What else do you guys want to cover? Let's see what else questions we got.
Actually, I have something I kind of want to ask. I have
Sure.
an idea on, and this is more of a game theory thing. I'm curious on how the liquidity pool is going to be fucked with by people knowing that there's going to be a lot of buy pressure likely to come in when announcements are made on this. I think a lot of people that want the price to stay low will likely want to buy, and that announcement comes, and then pull that liquidity so the price runs up high, and making the order books very thin on the way up. Now, that's not like a guarantee, of course, that that's going to happen. But if I was a large liquidity provider and I wanted the price to appreciate as high as it possibly could during a time when volume was going to be at a high point, that's what I would do, for sure. And take the small hit in the short term for not making money on fees, right? For having that liquidity in the pool. I don't know what your thoughts are on that, though.
Yeah, so you basically, if I just, I was kind of reading comments as you were saying that. So what you're saying is that you expect liquidity to be shifted for price positive action, basically?
Exactly. Yeah, like they're purposely wanting it here now because they know the volume won't be enough to pull it up.
That's interesting that you bring up volume. I mean, yeah, because like if you look at when was the best time to buy Bitcoin, it's when the volume was at the lowest.
Yep.
So like if you go back,
Yep.
so like if you see here back in between February of this year and April of this year, the lowest volumes of the year preceded the biggest volume candles up, which then got rejected because no Pulsechain launch. So that did happen once before where you got a pump off lowest volumes of the year, and that pump was worth a 91% gain in 18 days. So now you're getting to the point now where volumes are continuing to trend down, and we just had a $13 million volume day. 3 days, right here. And so it's still trending down, but you're getting these spikes of called liquidity injections, which is preceding a breakout. You've had breakouts now, and so I'd agree with you that it's just a function of the buy. I don't think any one individual or participant is like doing this on their own, but I know that liquidity can be pulled in such a way that this liquidity, for example, if this is by an actor that wants the price to move higher, could pull this liquidity and start buying the HEX token, and it'll push the price right out of here because this stuff can change all the time.
I have to imagine with how transparent the order books are on HEX that there are some people doing that for sure. We're still small enough where that could be the thing. Like Bitcoin, that's not going to freaking happen. You have to be literally Elon Musk size, and even then, he barely moved price. So, but with HEX, someone could easily come in with 5 million liquidity, pull it, start buying the price, and we're back up to 15 cents. And then people just go, "What the fuck just happened? We just did a 5x out of nowhere." Like that's like when people don't believe HEX can move that fast in that way. It's like, once again, going back to our conversation about low float stocks.
Right.
Yeah, just look at low float stocks. If they saw these stocks in the early pre-market trading moving up multiple dollars in an hour time frame, that's how easy it is. Like these stocks go from 60 cents to $4 in 2 hours and then come back down. It's because of the stock setup, right? The stock to flow. This is essentially the same thing. It's just it's a different, same mechanics, right? But just different
mechanics.
Yeah.
Yep. So low liquidity is easier to move price. 100%.
Exactly. Especially when it's so transparent like this, right? You don't have to look at share structure or any of these other weird.
You made me want to bring up the TVL. So this is showing you historically the amount of coins locked in liquidity. And if you see here, when we peaked in September of last year, we had $25 million of liquidity in the pools. And then that continued to be siphoned off through each different selling wave. And then we had the break of 10 cents, which was basically one big player rugging the entire liquidity pool back down to 8 mil. But it held, and now we're trending up in liquidity. So what the market is doing is it's just not one actor, it's hundreds of actors or thousands of actors putting their hard-earned money into the asset, growing this asset base. And this will continue to trend up because HEX does have product market fit, and it's here to stay, and it's got immutable monetary policy. So those are like the value functions that are driving demand more than anything. It's the yield from the T-share rate and the T-share. And that if you need more information on that, we can do a stream at a later date. That's the drivers of the HEX ecosystem. So I wanted to make one other comment on volume. I'm going to take a screenshot here. This here chart is showing you the volume per day, and so this goes and reinforces your comment on how volume works to pump price. So if I pull this chart up and I start drawing trend lines, what do you notice about every time that the volume falls. You'll notice that there's a huge spike in the price or in volume. So volume only falls for so long before liquidity gets re-injected back into the asset, whether it's from one actor or 100 actors, it doesn't matter. The point is there is demand there for the asset because it's producing immutable yield and it's backed by some of the strongest players in cryptocurrency. So
you know what that plays into nicely as well, and this happens with stocks all the time. It's called when an asset gets into a squeeze, right? It's in a range too long, it builds up too much pressure, and that typically is the reaction, right? The emotional reaction. Eventually, it goes just a little bit above the structure it's in, or a little bit below, and that causes one human, typically, right, to sell or to buy big and say, you know what, F it, like this is the price I have to get it at, and then boom, that starts more sell pressure, and it's like this momentum. So yeah, you can see these squeezes are forming, and as we continue to form more structure here at 3 cents, it's just a bigger and bigger squeeze because more and more people are locking in that this is the best price they can get this asset at, and then eventually the price floor is set, and we never go lower again, and like that, thus the cycle continues. So yeah, we're seeing all these indicators kind of lining up for like the next month or so, and honestly, a good chart to pull up now. I know my time frame is slightly off on it. I was wrong, but the HEX the BTC chart, man.
yeah, it's great.
Look at the way it ripped back up into that range. On last time we did the show, I posted up my chart on the range, and it just ripped right back up into that range. And depending on what happens with potentially announcements and this and that, that's all it takes for one weekly candle on the HEX BTC chart to just go right to where we thought it was going to go. You know, we're so close to that point. And all it takes is Bitcoin to go back down to that 12K range and HEX to come up to 5-6 cents for it to really solidify that it's going to be gaining on Bitcoin from here on out for a long time.
So for those of you that are new or don't understand this stuff fully, what this chart is it's a cross between the dollar price of HEX versus the dollar price of Bitcoin over time. So it's basically measuring your HEX in Bitcoins. So right now HEX is trading at like 178 Satoshis, and that's irrelevant to the fact that the price structure that you see on the page here. So like you can see here, back in January of 21, there was an attempted breakout. And I think this is what Ryan's trying to say, is that there was an attempted breakout. And so if you were to get a move like that again, you'd easily break the top of this wedge in 12 days for 180% move against Bitcoin. What would happen would be Bitcoin drops or stays the same and HEX just gets a huge pump. Or, you know, it can happen any which way. If Bitcoin price goes down and HEX stays the same, it can go up. If HEX goes up and Bitcoin stays the same, it can go up. If HEX goes up and Bitcoin goes down, it's going to really go up in this sort of a way where it starts to decouple away from its old 178 Satoshi level and try to shoot for 300 Satoshis and try to build structure above the top of this wedge in a bull flag, and then it will have continuation up and down into the future. But
that's
these
how the
falling
last one
wedge
started too. That basically signified not that
Yep.
Bitcoin was always going down, but that HEX was going up faster than Bitcoin was going up.
Yeah, so if you just get like a regular fractal here, let's just say it happened tomorrow, you know, you started this trend. I'm not saying it will, I'm just saying if you did, because it doesn't matter if it happens tomorrow, in 3 months or 6 months. The point is, by the end of this wedge, it's going to happen. Like HEX isn't going to go down forever. It's just not. There's 3-to-1 bids to asks most times, which means there's more buyers than sellers. It's just a product. It's just a function of simple product demand. So you could try to get a breakout, and then everybody who is underwater sells their positions, gets their money back, and then the whales get to buy back even slightly cheaper against Bitcoin, and then they just start to build. This is where real demand picks back up. It goes back for a retest of the top of the wedge and then goes. And then, so I guess this would be a good time also to show you guys the HEX Ethereum chart. But before I do that, I want to show you, as we compared Ethereum market dominance to Bitcoin market dominance earlier in the stream, here you can see Ethereum versus Bitcoin over its entire lifetime. So Ethereum bottomed against Bitcoin, ripped, created a triangle, falling wedge, broke it, recovered it, broke up, created another giant falling wedge through 2018, 2019, bottomed, and then started creating structure and market dominance. All the dApps came out, Uniswap came out, HEX came out. It gave Ethereum way more value. And then now Ethereum is trading just, I think it's 50% down in Bitcoin terms, but now it's up 336% against Bitcoin, and the Ethereum price itself outpaced Bitcoin's growth with a 5,900% return in the last bull run versus Bitcoin's 2,000%. So it did over 2.2x higher. So that's kind of deceiving that this did 330%, or let's say 440 from the low to the high times 2.2. So you get like 1,000% gain over Bitcoin, even though you, in dollar terms, even though you can't see that on this chart. So Ethereum's completely decimating Bitcoin, period. There's no discussion to be had about that. So when you go and you look at HEX versus ETH, you can kind of see that it's also building two falling wedges. It did its first falling wedge. This isn't the full chart either. This is the full chart here. So you can see that it did a wedge
I think
here.
That one's really important to show people because they're going to go, well, okay, but what happened
so
before?
let's just compare them both so you can't deny it. So on the top we'll do ETH Bitcoin, and on the bottom we'll do.
Be right back. Bio.
Yep. And then on the bottom we'll do HEX versus ETH. So check this out. Here we have HEX versus ETH on the bottom. On the top we have ETH versus Bitcoin. Literally printing a low, high, a second low, a high, and then a final low. And then ETH did that already. A low, a high, a second low, a second high, and a final low. And then this ETH with product market fit, new technology, new utility, built its valuation over time against Bitcoin. HEX is going to do the same thing. It is the same chart patterns playing out. And so with when you accompany that with like a pulse chain launch, like it just, the signs are in the charts. This is all looking great. Yeah, I think like just looking to anybody that can see pattern recognition is going to see that there's an obvious similarity here. What up, Marion? Let's see what questions we got here in the chart.
Back.
All right. So if I just a quick, if he said Crypto Bigfoot asks, if the yellow box in HEX LPs lowers or increases, would that relate to people adding or removing liquidity? Yes. So all these boxes can change and shift and move. The color coded just so you can just see the difference between them. But yeah, so the orange is the thickest just right now, and yeah, these can change because people can add and remove liquidity from this chart here. So this is like the orange box in here between 3.68 cents and 3.24 cents. So that would correspond to your orange box here. That's where the thickest bars are, and that's what's being rejected off of. So what we want to see is the price to get up to the top and then start to consolidate inside of here, like this, and then start to build like demand, just organic demand, versus just the constant like rollovers that we've been seeing. So again, I'm gonna pull up a big chart now to prove this, just to like basically show you the actual data here, so you can see these patterns, right? Let's pull up the main. All right, so here we go. HEX ETH. If HEX follows the ETH BTC fractal here, it's set to gain. So HEX is set to gain 389% against ETH, and still stay down 27% against ETH from its all-time high, but it'll still gain 389% against ETH. But that's in a market most likely where ETH is going up as well. So HEX is effectively leveraged ETH, and it's going to give you compounded returns in price appreciation against ETH. Plus, if you're a staker, you're going to compound those times too. So the power of HEX is in staking it, obviously, and staking it earlier and longer. Understanding all this years ago would have netted you insane returns into the future. So if you're getting in now for the first time, you're good because you're buying the lows, and you're going to be able to see this through for 2 more cycles of this type of action. And you're basically front running Pulse Chain, and you're going to get a duplicate on Pulse Chain if you hold the coin. So
yeah, guys, remember that's a stock split. We talked about this last time. I will never stop saying this. Like, look at what happened with Apple or Tesla or Amazon, any of the big, oh, I wish I could have bought these things. They've done multiple stock splits. There's a lot of reasons, a lot of psychological reasons why there is a run up leading into a stock split.
So I'm pretty sure this was one of the stock splits here. Was in May, right, of this year. I'm pretty sure you'd have to go back and look again. We did look at this last time. So if you haven't, go back and look at my last video with Ryan. I think this was it here in May where they announced a stock split and there's this huge run up on price, and it was like a 52% gain on Tesla stock, and then it did a triple top. So if I zoom into like a daily, you can see that it did a huge run up here for 50%, and then did a triple top, gave you 3 chances to exit, and then sold off with the rest of the market. And so what happens when you get a stock split, or in this case, a fork of a coin, we can expect a run up to preemptively come in and push the price up as a function of, oh shit, I sold on my HEX, I need to get some before the split. I need to get some so I get a duplicate, and then the sell off comes afterwards. So that's kind of what Ryan's saying.
Yep.
See what questions
you guys got to understand, like, the reason Richard brings up the fact that he mined Bitcoin and got the free block rewards, you guys got to understand the game theory behind why he actually tells people that over and over again, because people don't get it. There is so much money in crypto. Nobody in 10 years is going to remember that there was a stock split on HEX. No one's going to care. Do you think anybody knows like Richard got that block reward 10 years ago? No, they swipe right on Coinbase and buy it.
Yeah, they'd have no idea.
No,
they have no idea there was a Bitcoin Cash fork war in 2017.
Yeah,
they have no idea.
It's like, this is why he's telling you this, not to brag all the time about it. It's like, listen, this is the opportunity. You're getting a stock split on one of the highest appreciating assets ever and the highest appreciating asset class ever, and an ecosystem that's proven itself. So it's like, obviously all these things are just, saying that we are confident or excited about Pulsechain launch. That's going to do great things, but just like, this is why stock splits perform the way they do. And on top of that, you have the leveraged extra of like, yeah, this is how crypto's been going for a while. And of course you can have like the doomsday, opinions like, oh, it's going to go to zero because this and this. It's like, you can't operate on those situations, because the same can be said about, the stock market or anything else. Like if that happens, great. The Hexagon channels will turn into learning how to farm, and we'll farmville it, and we'll that's what we'll care about, not our portfolios at that point. Like we have bigger issues if things go to zero. So you can't really operate under that mantra of like things could go to zero. Like I know that's what people think, but typically they don't. You know what I mean?
Yeah. I mean I've been in crypto since March of 2017. I built my own data mining facility. I mined Bitcoin, Ethereum, Litecoin, Dogecoin, and Scicoin for years and years. And then I sold the Bitcoin mine at the $64,000 Bitcoin top in May of 21. And being here, where do you think my profits went to? It went into HEX stakes, because that was the one asset that I believed in that was going to give me a yield indefinitely, that was going to be able to outpace in price. Even if it only went back to 30 cents, with the amount of investment I made at those prices at the time, was still going to be able to outpace anything I could get in the legacy world. So in my eyes, it was a kind of a risk-free play, because HEX is a commodity, and so I'm not concerned by any security FUD. It is what it is. It exists. You can interact with the contract or not, and Ethereum's here to stay. So HEX is called the top. Not really, dude. I did not call the top on the day. It was coincidental that I sold at the top, because that's when there was the most demand for mining facilities. So it's just a function of hype. The people will come to you when you're in the right side of the trade. Sweet Dude asks, what do you think happens to HEX when on both chains? Buy pressure gets diluted in half and sell pressure ? Your guess is as good as mine. I mean, I could theorize about it all day.
Yeah, really, I think it goes into the game theory of what Richard's going to do to those stables and how he's going to set up the bots and set up liquidity pools.
Yeah, the liquidity pools play a huge role in it, because if EHEX is tied to PHEX on both chains, then their price will move together, because there will be so much HEX backing the price in the pools that I just feel like they'll move together, but maybe at like a discounted rate on one of the chains, and they may oscillate against each other, so that at times they'll find their own rates of growth, and then at times they'll be over and undervalued relative to that rate of growth. But I do believe that both HEX ETH and Pulse HEX will both go up in value. I don't think that ETH HEX is done by any means, and I think Pulsechain has a lot to prove. So your best bet is to if you could find a crystal ball and find out what the ratio of EHEX to PHEX was going to be, you'd want your portfolio to be that ratio. And over time, the pendulum will swing in one direction or the other, and money will always flow into the next best asset. So as long as PHEX remains the dominant or EHEX remains the dominant, it should trend in that direction until a better technology comes out. So it's neither. I don't think either one dumps and like becomes unvaluable. But at the same time, I think that they're both going to find their own growth rates, and they're going to have a. I think that they're both going to go up over time, honestly, just because it's a function of what their liquidity is tied to. So that's just an opinion piece, and honestly, I can't predict the future. And my personal plan is to hold equal amounts of both, because if the returns, if let's say HEX gets to like 30 cents on, or 20 to 30 cents on one of the chains, and the other one stays at 10, like I'm still up 3x from 3 cents. So
let's put it this way: every time Amazon, Tesla, Apple announced the stock split, buying right when they announced it always performed better than after. Always. And not to mention, you're not only getting HEX. So if HEX performs better, you already bought HEX, but then you have whatever Pulse HEX is worth. You know what I mean? Like, you didn't get that with Amazon or Tesla. You didn't have like a Tesla B, an A share and a B share that you also got access to. It was just still Tesla, right? You're getting a whole other asset with this. So it's performing as a stock split from a price perspective, but there's actually two separate assets. This is totally even more insane than a normal stock split. Like, the stock split is a psychological effect, right? When Amazon did it, it was because they wanted to make the price more affordable for a user to buy. Right? When you see Amazon $2,000, does that give the everyday Joe the want to buy that thing?
yeah. So your decisions for that type of a question should be based off what you're seeing in staker behavior. Because honestly, the stakers are going to be the ones that are going to be able to affect the price chart. So if you saw stakers exit ETHEX for, like, it went down and like this, let's say they all EES their stuff on ETH, for example, that's going to be a huge opportunity zone for price to do better, because like, who's going to be left holding the HEX to dump it when the price does a 10x overnight? Like, they're just going to be so keep your eye on the T-share rate.
It's going to be wild. It's going to be wild. I told everybody, just like, don't even play it, man. Just grab like a bottle of whiskey and just have a drink and just watch the charts. It's going to be crazy, bro. We should do a live stream when it goes live and just watch the charts.
Yeah, I'm going to be live a lot more in the coming year, and that's because the hexagons are on the right side of a lot of this stuff in crypto, and so we have to stand up.
Recently,
we have to stand up for it, and we have to show people the way, and like where the value is going to be is in our assets. So we need to be stewards of that. And so I'm going to be doing more. I'm opening a website at accessalive.com where there will be like all kinds of resources and tools for you to check out. And obviously I'll be continuing to make public appearances and share my knowledge but the cutting edge stuff, that's going to be behind a paywall. So I just, for anyone that's listening out there, there's going to be plenty of stuff coming for everybody. And it's important to me that, because I'm in HEX, and I think, the founder of HEX ultimately makes decisions based on what's best for everybody. And so I've always followed that same philosophy. So I want to basically make the market smarter and more knowledgeable so that they make better decisions. And that hopefully in turn should make the price perform better, because you'll just have better actors in the systems that has the coins. Those who acquired coins in 2022 are going to be smarter and better actors in 2026 and 2029 than if I didn't show up for work every day and spread the good word. So yeah, I mean, I think this would probably be a good spot to maybe wrap up, in the short term here. I have all kinds of these other charts open for other coins in the ecosystem, so I might just do a quick dive into them. Here's Hedron from the top in USDC. It's down like 70%, but there's only like 500 wallets that has any amount of dollar value in here left, and that's just for the sitting coins in the wallet, not for what has not been minted. But as the years go on, there's going to be less and less 10x minting bonuses, 9x minting bonuses, and so those guys will have less and less of an effect on downside of the price. And Hedron's still undervalued relative to its ceiling price. And if you want more information on that, you have to visit Crypto Sloth's channel, or look at Crypto Sloth on Twitter. And then this is the Hedron versus Hex pair. This is Hedron valued in hexes. So currently you're sitting at about 15,572 Hedron per hex at the all-time high. The recent high it was 6,700. So you've seen you can get almost 3 times as many. I think it is. Oh, it's 130%. So not quite. It's about 2.3 times as much stuff hex you can get with the Hedron now. And this blue box represents the OA wall, which is where a lot of the accumulation could happen for a new wave of whales to accumulate. The question or not for me is whether or not you get down there and for how long you're in there before this type of quick price action happens again, where it just kind of like big holders, big believers comes in, big hex stakers that are good actors like want to see price appreciation in that thing since they're getting 10 times of them and then everybody else, and they push the price higher quickly. So it can go down, drag its ass down slowly for a long time, and then just like rip like it has before, in the beginning and in recent history. So I'm pretty bullish on Hedron and Hex, and then ICSA. ICSA's been struggling a little bit lately. I think it's getting near an opportunity zone on that wick low from September 25th. It's at the bottom of a descending channel. There's nothing saying that it has to go back up. It's just that there's an arbitrage opportunity on that contract when you basically sell HSIs to the contract, and then you can get yield in ICSA, and so it won't dump forever. And it just looks like an opportunity. It's getting near that zone where I could see a big buyer come in on such a small liquidity pool of only 35 grand. So and maybe that takes until a full-fledged bull market. I'm not sure. I really can't predict this chart right now, but this is ICSA measured in hexes. So hex has gained in value against it during its ripping phase. And that's what you need to know about that. Maxi is kind of in a similar position where it topped in September for almost like a double top, and then the launch of all the new perpetual products from Maxi came out, and people started to diversify into those, and it could not hold its levels, and now it's coming back down to the 1 hex equals 1 maxi level. And if it breaks the 0.236 here at 1.32 maxis per hex, you'll lose 30%, and it'll, for the first time since the beginning back in May and April, be at a discount relative to hex, which would be a huge buying opportunity. Team is sitting on barely any support. It's just chilling, but it is grinding up, and it is bullish right now. But there again, it's a small liquidity pool, only 60 grand. Team USDC here. There could be an opportunity there as well. And then we called this Pulse Dogecoin move the other day on this double bottom. You can see the yellow drawing here. Pulse Dogecoin made a nice, 35% move off my call, and it did break and retested the 0.618, which is 0.618 is a key harmonic level for human behavior and psychology and in nature. So it's like a level you want to look for a retest of. Looks like it's getting sold back down, so there might be some downward sell pressure now to try to bring it back down for a double bottom. And then Pulse Doge measured in hex, like it's got one of the best hex charts. It's been going up against hex for a long time, but again, here it is. It's basically going to get tested here. It tested this resistance line, and I just don't see it going up against hex when hex is like ready to rock it. So ASIC, another derivative of Pulse Doge system, it tested the highs of its downward channel and is now going to fall relative to USDC. Pulse Bitcoin just I think that's a mine token from the ASIC token, and it's basically constant sell pressure on that token for now. So that's the ecosystem in a nutshell. How I'm seeing it, how I see it playing out. Obviously, hex is king. That's the one you want. It's a for sure bet. And it's looking in really good price structure right now, and that may have been the low on 2.3 cents. So may have, we don't know, but it's again looking at dominance charts and looking at how close we are to a bottom on the HEX ETH chart, on the HEX Dominance chart. It just looks to be a good time to be DCAing in and making your stack if you have none. So, what else we got here? questions wise. Yeah, so there's a lot of ways. I mean, and again, if more to come with accesslive.com, how to use hex like ladder in properly, and how to predict market cycles and try to time things up properly, and because that all plays into when you're your own banker, you need to be thinking a lot about this stuff. It's not something that you can just come in willy-nilly and try to have a really good game plan to become a multimillionaire overnight. But if you can have such a simple approach to it as just buy hex and stake it and let it ride for 5 to 10 years, and then you're going to have more USD value at the end of the road with a fork too, in this case. Or you can really take it a step further and do laddered out stuff based on what you predict market cycles to be, which is part of my expertise. So, yeah, Bitcoin didn't get to 100K, but if you were in at the $3,000 bottom last cycle and you bought ETH at 89, like some of us did, you know, we been in it long enough. We understand these market cycles. So, anyways, anything else you want to take a look at before we hop off?
I think that's good. I think the only thing to add on to all the other coins you just talked about was they kind of act like hex with ETH. You know, like they're gonna get wrecked when hex goes up, but then money shifts from hex into those other things because they're so closely tied to hex, like a leverage play on hex almost. So, and hex is already a leverage play on ETH, which is you know how it goes. So it's going to be interesting to see how a true bull market is going to play out for these projects as these projects release during a bear. And I think that's going to be a very different situation compared to when hex goes through its next bull, and then that shifts into those other projects. I'm just really curious to see how that plays out.
Awesome. I'm super excited, man. Thanks for joining me. Thanks for coming, everybody. Appreciate you, and we'll be back again in the future with another broadcast.
Yes, sir. Sounds good.
Take care.